on slide 17, and that's McDonald's U.S. Same-store sales, and they created some controversy when they reported earlier this week with the first quarter, or the fourth quarter, sorry, being down 1.3%, and I would say going into this quarter, the estimates didn't have the first quarter of 17 down quite 1%, so the analysts have gotten a little more bearish on McDonald's coming into the first quarter, and then obviously they see an immediate snapback going to 2.7% comps by the fourth quarter in the United States. We tend to disagree with that theory. McDonald's is actually on our, while we were bearish on McDonald's for a while, we are now bullish. We were bullish on McDonald's for most of 2016 and half of 2015 and 2016. We've flipped and are now bearish. I don't think it's it's on our short bench, as we call it. But this kind of one quarter phenomenon, or maybe two quarter phenomenon of declining comps, is probably not the right call for McDonald's. So I'm going to say that I think the estimates, the consensus estimates, which is what you're looking at here on slide 17, are too aggressive for McDonald's USA, and I think that's why the stock probably underperforms for some time. We will get more data from them, I believe, next week.
Moving to a bigger cap name, McDonald's here. It's been a while since you guys recommended this, and thanks for the trade. What's your current opinion on the corporation? Maybe just expand a little bit on what you talked about previously.
Yeah, so McDonald's is a great company. I don't, it pays a pretty healthy dividend. It's got great margins, great cash flows, strong returns. But, as I sort of laid out a second ago, the comp numbers in the U.S. are challenged, and that dominates the thinking on the stock and dominates the multiple. So as long as that's, as long as they're not in sync with marketing and promotions and the comps in the U.S. will suffer, then the stock will suffer. So I don't think it's a great short, but I don't know if that's a great answer.